Hi guys, welcome to the channel. Today's video I'm going to be talking to a mortgage advisor who will be helping us understand mortgages a bit better. On this channel we talk about nursing and finance, and we help nurses bridge the gap between nursing and finance. So today I've got Sizwe, and Sizwe is going to be talking to us all about mortgage. So Sizwe, how are you doing?
I'm great, Shola. Thanks for inviting me, and hello.
Okay, so one of the things that people talk to me about is, can I get a mortgage? How can I get a mortgage? What do I need to do to prepare to get a mortgage? So for somebody who is a nurse working for the NHS, 3 months, 4 months, 5 months before they decide to get a mortgage, what are the things that they need to be putting in place?
Okay. So lenders are generally looking at three specific things. First of all, they look at income. So you're a nurse, you've got your income, you're working full time. Yeah. That's just your pay slips. So 3 months pay slips is what lenders are going to look at. If you're a new nurse, you probably just want to do that purchase after your probationary period, so that they know you're in the job for the long term. The second thing lenders are going to look at is your credit. Okay. So, how are you managing your debts? How are you managing your payments? Are you over leveraged, or are you missing payments? Do you have CCJs, or do you have default? Some people feel that maybe not having credit or paying off everything is good. It's probably not the best, because people want to see that you're able to make payments. So credit is the second thing that lenders will look at. And then thirdly, they look at your status. So we've got a lot of nurses who come from abroad. What's your immigration status? Do you have the right to stay? If you're working, of course, then that's good. But if you're on a visa, you wanna make the application at the beginning of your visa, whether it's just your renewal, and maybe not so much when you're getting to the end of your visa.
Okay. Because of the uncertainty about your stay. Are you going to be allowed to stay? Are you going to be leaving the country?
Exactly.
And so on and so forth. So you mentioned about income. With regards to income, what sort of multiples are the lenders looking at?
So traditionally lenders would say, look, 4 times income. Or a lender would say, if it's a joint application, 3.5 times the income. But those incomes no longer matter now, or those multiples no longer matter, because every lender has what we call an affordability calculator. So when we go onto a lender's website, we utilize their affordability calculator. And there's a reason why. House prices have gone up at a much faster rate than incomes.
Yeah.
A nurse starting out is probably on 25K.
Yeah. So band 5 rate.
Yeah, band 5 rate. So if you then say, okay, 4 times income, that's 100,000.
Yeah.
This nurse is not going to be able to buy.
Not at all.
And that goes for a lot of other occupations. So what lenders have done is they've used what we call an affordability calculator, and essentially they're saying, look, what is your disposable income?
Yeah.
And how much is it going to allow you to buy?
Okay.
I mean, one of the examples I can give is that, you might be renting a property at £800 a month. Yeah. But your affordability in the traditional sense only allows you to get a mortgage at £400 a month. Yeah. But you still pay £800. Yeah. So lenders know that. And now the affordability calculator comes in and says, actually you've got a disposable income that will allow you to pay £800 a month. So based on that, we are going to give you a lending of so much.
So you've got a track record that, every month, day in, day out, I'm paying £800 rent. And what you're proving to the lenders that I'm actually able to afford this repayment on a monthly basis.
Yeah.
Okay. So the second thing that you mentioned was the credit. And for somebody who is probably been a nurse for a year or so, what can they be doing now? I know a lot of people are very scared of credit. They don't want to have a credit card. They don't want to take credit. What are some of the things that we need to be doing as nurses now to be ensuring that we're preparing ourselves for the mortgage market?
I mean, that's a good question, credit is kind of like a double-edged sword. You know, you don't want too much credit because that reduces your affordability.
Yeah.
But you want credit so that you can show that you can pay.
Yeah, that you're reliable person when it comes to credit.
So do you get some credit? I mean, one of the best pieces of credit to get is a credit card.
Yeah.
And if you're able to pay that off every month, that's good. And it's sort of easy to manage because you could just say, well, I'm going to use this credit card to buy fuel.
Yeah.
I mean, you're going to use that money anyway.
Yeah.
So you just save that until the end of the month and then you pay it off.
Yeah.
So you then build your credit
in
that way. One of the things to be careful about with credit is lenders look at how much of the credit that you have available you're using.
Yeah.
So if you've got a credit card of £500 and someone's got a credit card of £1,000 and the person with the credit card of £1,000 maybe then uses credit of £600. They owe 600 on that credit card. And you with the credit card of £500 use 400 pounds. You owe less than the guy who's owing 600. But from a credit perspective, you are a riskier individual in credit terms.
You're comfortable with risk.
No, you're risky. Because you're using too much of your credit.
Too much of your credit.
You're going way too much towards your limit. And lenders don't like that. They don't like people who live within.
You're too much on the edge.
Yeah, exactly. So you may find that someone actually has more credit owing, but they're actually better off in credit terms.
So for me personally, generally I have a very good credit score, but recently, I think because I've moved houses, for some reason my electoral roll hasn't been either submitted or there was something wrong. And actually that had a slight impact on my credit score. How important is registering for electoral roll in mortgages?
So it's fundamentally important because it shows that we can find you. And it shows that you've got an abode somewhere. So wherever you go, if you have to move, and of course, nurses move. Always move your electoral roll and register at the new place. And it plays a major part in boosting your credit score.
Fantastic. That's really good, and that's very insightful for nurses who are PAYE nurses who are looking to get mortgages. One of the things I'm very aware of is that the way nurses work is different now. There are people who are PAYE nurses. There's some nurses who are contractors working with umbrella companies, and there's some nurses who have limited companies who work with their limited company. So I'm going to move on from the PAYE to those nurses working with umbrella company who are either contractors or agency nurses. What do they need to be doing to be able to secure a mortgage? And is it actually possible for them to get a mortgage?
So Shola, what was happening within the market was that this was a new area for a lot of lenders. But nurses, of course, are attracted by the higher revenues that they're getting from agency work, and they, of course, work agency. Now, what was happening before is some of the nurses would work agency, raise a lot of money, and then shift to full-time role, and then go and get a mortgage, and then shift back.
It's like a disguised income, really.
Exactly. But it's no longer necessary to do that. What is important is to understand how you're getting paid. So we've got a few options in how we're getting paid. You can get paid by an umbrella company that takes NI tax at source. And that's sort of taking everything at source. And I have to say here, not the umbrella companies that give you two payments. Where one payment they're taking the income, reducing it to £12,000, and then trying to pay tax and NI on that, or just about 12,000, and then they give you a loan.
I've got a video on my channel about that in terms of what people need to be aware of when going to umbrella company.
So those umbrella companies sometimes tax avoidance schemes. Of course, you get a lot of money as an individual, but it doesn't really help you because the income that we are only able to see is that which you
12,000,
paid
yeah.
tax on.
Yeah.
The other part is a loan. So
Yeah.
actually it's a commitment.
It is, yeah.
So it doesn't help you to increase your affordability to get a house.
Yeah.
But what do we need to do?
Yeah.
Okay. There is nothing wrong with working with these schemes. I make no comment on these schemes.
Yeah.
Of course, if they are legal, it's they have to be legal schemes.
Yeah.
I mean, but it's not an area of expertise for me.
Yeah.
But what do we need to do as individuals who want to gain access to lending?
Yeah.
You need to allow the umbrella company to pay you the full amount.
Yeah.
And to tax you, to deduct the tax at source,
Yeah.
to deduct the NI at source.
Mm.
That works for a few people.
Yeah.
Okay. And that works only if you're not then getting paid into a limited company.
Yeah.
Okay. If you can do that, then that's fine.
Yeah.
You know, the lenders will take that income. They will understand that this is an umbrella, but your tax and NI is taken at source, and you're actually getting your net income. That's the true net income.
Yeah.
And lenders are happy with that.
Yeah.
The second group of people are nurses who are getting paid into their limited companies.
Yes.
Now that's slightly different.
Mm-hmm.
Because most of the time, the umbrella company is paying you everything less their fees.
Yes.
Okay? So this goes into your limited company. It doesn't mean that that's your income.
No.
As a nurse.
No. It doesn't.
That income belongs to the company.
Business, yeah.
Even if you are the only director
Yeah.
of that company. And we know that you're using this company
Yeah.
just to facilitate your income.
Yeah. Because your company is a solely different entity from
Yes,
you. Yeah.
yes. You and the company are two totally separate entities.
Yeah.
So now you've got, 1,500 coming in, 1,200, whatever the case, and you're spending the money.
Yeah.
You then do your returns for the company, and we do know that sometimes people dumb down their incomes,
Yeah.
up their expenses, whatever they do, but you do your accounts and pay some tax, corporation tax.
Yeah.
If that's all you've done, you have zero income.
Yeah.
As an individual.
Yep.
You're spending all this money,
But you don't have
but
any.
you don't have income
You haven't paid tax, national insurance on anything.
on anything.
Yeah.
So you need to pay yourself.
Yes.
There are two ways you can pay yourself. You can put yourself on your company's payroll,
Yeah. Income.
or you can pay yourself a dividend. I'll start with the payroll.
Yeah.
If you put yourself on your company's payroll, you can pay yourself whatever you want.
Yeah.
Lenders tend to not like that
Okay.
because they don't really know if this is actually what you're paying yourself.
Yeah.
And anyway, you can pay yourself everything that the company makes for a period of time.
Yeah.
So it's a very manipulatable
It is. Yeah.
system. So lenders don't really look at your payroll income when you are working in your own limited company. They look at dividend.
Yeah.
You have to declare a dividend.
Yeah. And that's reflected in your self-assessment.
Exactly.
Yeah.
So you can't hide the dividend.
No. It's clearly stated in the self-assessment.
What are the advantages of having the dividend? Now, look, if you're paying yourself on payroll, there's money that comes in every month.
Yeah.
But usually this is your own company, this is your money, you're usually just taking it as and when you want. And even if you pay yourself, whatever, £2,000 a month, if that runs out, you're going to take some more money from your company outside payroll.
Yeah.
So it's not a clear reflection.
Yeah.
But the dividend is only done once a year,
It
or
is.
sometimes twice a year.
Yeah.
Usually, it's easier to do it once a year. It doesn't matter when your company accounts are due, your dividend makes up your self-assessment, which is done in April.
April, yeah.
At the end of the tax year. So pay yourself a dividend.
Yeah.
Declare it.
Yeah.
I have to say as well that with the dividend, nobody needs no one is asking you where is the dividend. Unlike the payroll, where we need to see
The
payslip, and then we need to see the corresponding income on the bank statement.
Yeah.
With the dividend, we just need to see the tax paid on the dividend.
Exactly.
So if you declare a dividend of £1 million, you're not going to, and then you pay a tax on £1 million. Surely you must have the million to pay the tax on it.
Yeah. Because dividend is paid on profits.
Exactly. The other thing is, you usually then can easily follow up with HMRC independently to see that actually this person has paid the relevant tax, and therefore the income that they're declaring is what they say it is because they have paid the tax. And it's important for me to say that because you must pay the tax.
Yeah.
Because your tax calculation, your tax overview will show if they're still tax owing.
Yeah.
If the lender sees they're still tax owing, that is a financial commitment.
Yeah.
Which will, again will reduce your affordability.
Exactly.
So you must pay the tax.
Exactly.
And then once that's paid, whatever the dividend is represents your income.
Fantastic. So what I'm hearing is that regardless of the way you choose to work, either using PAYE, either using an umbrella company or limited company, it's very possible for you to get a mortgage.
Oh yes.
Fantastic. And for the nurses out there who are worried about mortgages, that is something from a mortgage advisor. One of the things that I have to say is that for some reason I'm not sure where the concerns are coming from, but these concerns are real and people are worried about that. So another question that I wanted to ask you is that there's some nurses will come and say, oh, my bank has approached me and they're offering to give me this. What are the advantages of having a mortgage lender, a mortgage advisor who is able to work in your interest and who is able to look at the whole of the market? What are the advantages of that?
So I mean, if my bank approaches me, my bank is only going to offer me the products that they do.
Yeah.
Now, if my bank is not having low interest rates to the level of other banks, they can't offer me the lowest rates.
No, they can only offer you what they've got.
Exactly, they can only offer what they've got. So the beauty of using a broker and a whole of market broker, and that's someone who can access the whole market, is that they will match you to the best possible product in terms of interest rate, in terms of terms.
Yeah.
In some cases, in terms of how long you can take the mortgage for.
Yeah.
I'll give you an example. The nurses maybe who haven't managed to, or who came into nursing later, and if they take a 25-year mortgage, it goes into
their retirement.
Yeah. Now, if you go to certain banks, they will say, well, actually, you then need to prove your income in retirement in terms of a pension.
Because you have to pay your mortgage even when you retire.
Yeah. But you can also go to other lenders who still have very, very good interest rates, but who are not bothered about the term.
No.
And they can stretch it to 80 years old. Without worrying about income in retirement. So a broker will allow you to access these products and then present them to you, and then you make an informed choice based on a number of
products available to you. No, that's fantastic. And I think using a mortgage advisor really opens you up to the market.
Yeah. Okay. We must also give full disclosure.
Exactly.
Brokers charge fees.
Yes.
Most brokers anyway. Yeah. Whereas your bank may not charge you a fee.
And they will just give you what they've got.
Yeah. But they give you only what they've got.
Exactly. So, on this channel we've got a lot of overseas nurses. Maybe you've been in the country for a year, or been in the country for 2 years. Some who are married to a British citizen. Some who are both foreigners who have been in the country for a year or so. With people like this, is it possible for them to be able to get a mortgage?
Yes.
Okay.
I think nurses are in a unique position. First of all, we know that we've got a shortage of nurses.
Yeah.
And bar maybe being struck off,
Yeah.
we know your longevity in the country is pretty much a given.
Especially with the current climate
Exactly.
and the demand for nurses across the world.
Exactly, yeah. So it's about maybe just ensuring you've built up some credit.
Yeah.
You've got your deposit if it's required. It will be required in most cases, and you're not making the application at the end of your initial visa period.
Yeah.
You know, the products are out there.
Fantastic. So another thing that I wanted to find out is that you've got nurses maybe along the way they've got themselves into some financial difficulties. The credit score is not as great as it should be.
Okay.
Should they be worried, or do they still have an opportunity to get a mortgage?
So I always say to clients, potential clients, there's a mortgage out there for everybody.
Fantastic.
Okay. If everything is in order, it's easy. You get a bigger scope of products you can choose from.
Yeah.
And lower interest rates.
Yeah.
If there have been any financial challenges in the past, you get a smaller scope of products and higher interest rates. Yeah. And of course, it's paying for your sins, isn't it?
Yeah, exactly.
But it doesn't mean you are excluded. In some cases, there may be work to do.
Yeah.
Okay. So I'll give you an example. Most lenders will not take a mortgage where there's been a default or a missed payment in the last 3 months.
Because it's very current.
Yeah. So you need to give yourself 3 months to come out of the situation, whatever it may be.
Yeah.
Missed payment, default, CCG, whatever. But after that period, you will get lenders. And then after 6 months period, you get more lenders. After 12 months, you get more lenders.
Yeah.
After 24 months,
it gets better.
It gets so much better.
Yeah.
You know, and you know, if you want to go to the high street lenders, you know, the really low interest lenders, then it's after 6 years.
Yeah.
But you don't have to wait for that.
Yeah.
For that long. You know, just make sure your applications are done 3 months after the incident has been recorded on your credit report.
Fantastic. And what I'm sort of getting is that 3 month rule is very important. The 3 month rule for pay slips, the 3 month rule for credit and building up your credit. And obviously, if you've had a CCJ recently or missed payment recently, then you need to wait till after 3 months. So that seems to be very important in the conversation that we're having. Another thing that I wanted to find out is that if I wanted to select a mortgage broker, what should I be looking for? What are some of the key things that I need to be looking at?
Well, one of the key things is the broker must be whole of market.
Yeah. Meaning that they can actually look at products across the board.
Because you don't want to be. If you go to your bank, you're only getting your bank's products. But if you get to a lender who's tied, you know, a tied broker who's tied to, you know, a number, you've just got a little bit more.
Yeah.
You know, but you want to get the whole of the market. So you want to get a whole of market broker. I think cost as well.
Yeah.
Brokers charge broker fees.
Yeah.
Generally, they're allowed to charge up to 1.5% of the loans they raise. So, you know, that's as much as they can charge under the current rules. But most brokers will not charge that much.
Yeah.
It's very competitive out there. So if cost is an issue, you want to be able to go to a broker who's charging you less, or as little as possible for the work that needs to be done.
That's correct.
There are sometimes you can't avoid certain specialist brokers who are only, for one reason or another, just specializing in certain difficult things. You know, some brokers will just specialize in auction finance.
Yeah.
some brokers will specialize in bad credit.
Yeah.
So those brokers, they'll charge you a little bit more because it's a specialist area. Not every broker can handle those challenges. So sometimes it's the background that actually tells you, well, actually, I can't just go to any broker. I need to go to a specialist
because
who will deal with subprime issues or who will deal with...
And also somebody who is experienced in dealing with these things day to day, as opposed to somebody that does it once in a year or twice in a year. That's
and
fantastic.
Referrals as well. I mean, one of the things is, ask around who has had help from which particular broker, and then ask around.
I mean, one of the things that we focus on this channel is to help bridge the gap between nursing and finance. And by saying so, some nurses might be looking at exploring things like buy-to-let mortgages. Tell me a bit more about buy-to-let mortgages and what we need to be aware of with buy-to-let mortgages.
So these are investment properties.
Yeah.
So you're buying these properties with an intention to rent them out and maybe make some passive income. The key things to be aware of is that most buy-to-let products require a 25% deposit. If the credit is excellent, maybe 20%. But generally, we say 25%. So if the property is £100,000, you need to put £25,000 as a deposit. It's an interesting area. Some people say buy-to-let is dead. But ultimately, if you are getting the property and it's costing you less than the rent that is being paid in it, you're going to get some positive cash flow. The interesting thing about buy-to-let is most people who are going to get a buy-to-let property get it on interest-only basis. So which means it's very cheap to pay for this mortgage on a monthly basis compared to your residential mortgage, which is mainly capital interest repayment, capital repayment. People will then ask, but at the end of the term, I won't own this property.
That's one of the questions I get very often.
But you've got to take off your residential hat and put your investor hat.
Exactly.
Interest only allows you to control this asset at the lowest possible cost. But then gain the most over time because you will gain in terms of the equity. So you're spending so little
and making so much.
But you're not. Let's put it this way. Suppose the mortgage was £200 interest only. And the same property was £400 capital repayment. And then you run the mortgage for 25 years. And then at the end of the mortgage, maybe that house has doubled in price. It's now 200,000. And in the scenario where you're paying capital repayment, it's still worth 200,000, but you finish the mortgage. So you've got 200,000 in totality. In this property. Where you're paying interest only, you've only got 100,000. But the 100,000 in the first scenario where you've done the repayment, capital repayment, is your money. It's not anyone else's money. No. It's your money. Whereas where you're paying interest only, none of your money is in there except the equity.
Exactly.
So you haven't you haven't parked your money for 25 years.
You're using the bank's money to do business, basically.
And then we say, okay, hang on. That house, where I was paying interest only for £200, as opposed to this one, where I'm paying repayment 400, could I have gotten another house?
Exactly. Compounding interest.
And paid £200? And the answer is yes, you could have.
So instead of having one investment, you've got two investments. And you're making income from two as opposed to income from one.
Exactly.
So that's really, really good, really good conversation that we're having. Another thing that I wanted to talk about is For people who are looking for residential mortgages, what sort of deposit do they need to be putting down?
Okay. So things have changed now. 95% mortgage is back.
Yeah.
I don't think we'll ever get 100%.
No. I think those days are gone.
Those days are gone, yeah. But the 95% mortgage is back, as long as your credit is good.
That's good.
Yeah, so you need a 5% deposit in those scenarios. Generally, even if there's a little bit of a hiccup, you then get pushed to 10% deposit.
Yeah.
Okay. Well, at the time of now, as we're talking, we still have access to help to buy scheme,
Of course.
which is coming from government.
Yeah.
It's got its own terms and conditions,
Yeah.
but essentially government is going to pay 20% deposit, you pay 5%, and then you get 75% mortgage.
Yeah.
It's not available to everyone.
No.
So I think the new nurses who are not naturalized may not be able to access those schemes. But those who have naturalized, they can access those schemes.
Okay.
The caveat is it's only for new build properties.
Okay.
Yeah, it's not for your old properties.
So if you're not looking for a new build property, then it might be difficult to take benefit of that product.
Yeah.
Okay, fantastic. So apart from mortgage fees, what other fees should mortgage fee and deposit?
Okay.
What other fees should nurses who are looking to jump on the property market? What sort of other fees do they need to be putting aside?
So very specific fees. So we start off with the valuation fee.
Yeah.
You're going to want to buy a house. So the bank needs to send someone to look at it to make sure that it's worth
The price. Yeah.
the price. So there's a valuation fee. For first-time buyers, your broker may be able to find a product with free valuation
Of course. Yeah.
built into it. So then you actually don't pay the valuation. So those are available, but specifically for first-time buyers.
Okay.
You've got legal fees.
Yeah.
Your solicitor's fees.
Of course.
You know, so these are anywhere up to 1,500 in cost. Ideally, your broker can recommend, or you can find your own solicitors.
Yeah.
But there are solicitors across the country now. Nowadays, it doesn't have to be a solicitor in your area. It just has to be a very good solicitor, and they can do a lot of their work online. So solicitors' fees are there. You also have, of course, the broker fees. Your brokers, if you're using a broker, your broker is going to work for you. You're going to have to pay the broker fees, and that's that. There's another fee that comes up. It's called a product fee.
Yeah.
So when you get a mortgage, the mortgage company has built a product, and within that product, there is a fee for getting that product.
Yeah.
Now, usually most brokers will recommend that you actually add it to the mortgage, and that way it reduces your cost.
Yeah.
And that fee can be anything. Can be £250, can be £500, £999. It just depends on the product you've got access to. But fortunately, you can always add it to the mortgage and not pay for it upfront. And then some other small fees like transfer fees, telegraphic transfer.
Yeah.
These are very small, £30 here and there, £15. Yeah.
So there you go. There you've heard it from a broker. What we're getting is that for a nurse to be able to get a mortgage, you need to put your deposit in place, and then you need to be looking at 3,000 to 5,000 in fees. Could be higher, could be lower. All depends on the product that you're looking for. I hope you've got value from this video, and if you like what you're hearing on this channel, please don't forget to like, share, and subscribe. Please, thank you for your time.
No problem, anytime.
Cheers. Thank you.